get this recording going. Right? So here's your election last year. 930 sideways, spikes up, range, rocket ship. Then it came back down into structure, rocket ship. Right? Let's go with today. Yesterday, blast off, sideways, blast off, traded back in, sideways. Is this what you want to see out of death? No. Bullish structure, traded down, violent. This alone isn't necessarily like this movement, you're looking at it being higher time frame. Okay. Well, what did we talk about? We talked about this movement coming in, respecting this area, and then putting in another valid high in here. Why is that important? It's important because now we're seeing defense of this swing and we're not looking at trading back down into this. Ergo, higher time frame PA. How do we know it's higher time frame? Because our swings in structure, we would expect this to trade back into the zone. We get this. And then not only that, we then defend this zone and start trading higher. We don't know where this high is going to be, but we know that the higher time frame is doing this. And we have no reason or cause to look short. Right? So, what are we looking at? You've got your movements in here, your 15-minute structure facilitating the higher time frame move. What I didn't like about this long, and you guys know that we're on stream this morning, this was a beautiful sweep model, which was inside of the wombo that Mikey marked out. Right? So we got this here. But price is fractal. What does that mean? It means that when you see this happening on your intermediate time frame, and by the way, did that happen prior to? Yes. Right? We talked about the movement, the expansionary movement from last night. We got that here inside of the SNDR that was responsible for this break yesterday. So we've got that happening here. We then break structure. We trade back down. We then hold here. What are the chances? What are the chances after we hold here that we get a retracement down in our lower time frames? So we've held here. We've now got our lower time frame move bouncing off of this area of interest. So now we don't necessarily know. We can speculate, right? You've got your area of interest here. Okay. Why are we drawing from there, not the swing? You could draw it from here, in which case we just missed. Right? I'm not concerned about this high because my narrative is bullish to align with structure. Recall that our 15-minute time frame was bullish. Right? So we're not really entertaining shorts. And I'm unwilling really to fight with either this is doing lethargic movement, which would have been beautiful. But I mean, happening, excuse me, happening at 940 all the way down to our time macro at 950. Not terribly interested in trading any of this. No structure. We then have our area of interest here. Even if you didn't take the sweep entry, and I did not, I saw higher time frame movement. Definitely a location that I liked, right? And you could argue to be long in here. We don't necessarily need to be in on this. Obviously, that's a beautiful 80 point or whatever trade that ends up being. But again, there's an aggressive way of getting involved. And there's a conservative way. So now you're here and you've seen this failure underneath a protected low. Respected. We now have an idea of tapping back into this. Right? And now we're looking at this area, which initially was weak. Or, yeah, weak high. We failed to put in a protected low underneath our higher time frame area of interest. Right? We've actually mitigated the midpoint of this zone as well. Right? So now we're expecting, given that we're in bullish structure, this low should take that high, and it did. But we're looking at where to get involved on the conservative side. So we're here now, and now we're marking up this. Does that area line up with something? Yes, it does. This is your lower time frame wombo. Right? And what happens initially? You get violent movement down, buying. We then liquidate the early longs into our area of interest. Conservative people will wait for the change in order flow, trading above that high. Aggressive people will take this candle as it's trading up back into the zone after the manipulation is done. And that becomes a case of looking at order flow. And away we go. Right? And now you're identifying that if she'll take this high, we talked about having 2 or 3 candles here. Why? Because that's now going to form as SMDR that breaks this. Right? We left this area, we traded back down into it. We failed here. We then liquidated early long, similar to what happened here. Sideways, we need this to really be concerned. Instead, we get a sideways range right underneath a high, which then ends up breaking it. Right? And now you're looking at trading back down. So we have this area here. I think we marked that out. You've got your intermediate time frame here. We get rid of all of this. Which one is? That's the lower time frame one, isn't it? Yeah. You now got this. You've got your prior swing in here. Beautiful. Right. So on stream, I had this area for aggressive. Underneath this low was the main target. That low was 718. This low was 719.25. Right? And what ends up happening here was we didn't get the reaction I wanted. I actually did take this trade. And seeing this reaction violently coming back down, you either take a small loss or you take it off break even. That's fine. You see this area now, you're expecting that if this was inducement, this should trade up and you would get a violent movement off of this low. We kind of got that. So we're now speculating 2 different things. Either this is inducement and this should be a rocket ship, or this is now inducement and we need to liquidate those guys into our actual area of interest, which ends up being here. And then going. And how we differentiate between the two is twofold. Number one, you're looking at this here, right? You see a major difference with these two. We have our low here, closing on its high. Great, it's exactly what we want to see. Even this here, sweeping above this candle, not ideal what we want to see. We want to see that trade back in. We got some reaction from it. Lovely. And then we fail above this area here into our prior swing with some violent movement. Right? So when do you know this area is kind of in jeopardy? We're looking at this trade away. We want to see this buying movement gaining steam, and this is now finished business, right? And we judge that based off of the buying that occurs after we tap into it. We had some buying in here, but we hung around. Not exactly what we want to see. Not exactly what we want to see. And we end up taking that low. Now you'll notice that your 5-minute time frame was actually quite violent into it. We got an inside bar, then running them down. This is where the 5-minute really proves its weight in gold. Where you're now looking at it and you're going, well, yeah, I mean, this is violent down. You essentially want to sweep this candle, right? We're kind of inside here. There's no real urgency that we're expecting from a higher time frame move, right? So major difference here. We got our low, we got a reaction, beautiful. We got our low, we got our reaction, beautiful. But you'll notice this violent movement down back into it was met with urgency to get away from it. This right here is the response you're looking for. So we're very cautious. We're very cautious when we see something like this, that we're not getting the movement that we want just yet. There's a lot of buying that's occurred, but the market isn't quite done. And we're seeing the inability to really have full body bullish candles, even though we're understanding this movement is lethargic. We're expecting rejection. And when that rejection comes, it's not going to be pretty. It's not going to be pretty. Does this make sense to everybody of how we're kind of reading the areas of interest and what we're looking for? Right? Conservatively, getting involved in here, like in here, is much better. You might have even gone long like here. This is kind of like initial entry, add, and away you go. Why? This is your tap back in that you're expecting, similar to this, right? This is the attempt of the bearish sell-off that is very weak, right? You're seeing weak selling, stronger prices. Weak selling, stronger prices. Weak selling, stronger prices, right? Strong selling, lower prices until you get weak selling, stronger, right? Strong selling, okay, sideways trading into this, cool. There's your sell-off. Why? Because we're expecting lower after this PA, but this achieved nothing. However, you knew with the reaction here that we weren't quite done to the downside, which would leave you to look at these candles' lows, right? Similarly, if you look at this area, this high is not done. That high is not done. We are retracing to go long, right? We are retracing in here to go long. This actually ended up looking quite nasty on the 15-minute, that high there, right? But that retracement provided a beautiful opportunity, which then sent us higher. And now what we're looking at is this area is just giving zero concern to short. This is just beautiful higher time frame delivery where every bear bar was just met with sideways PA as everybody gets out of their positions from the orange man getting back into a place of power. Right? This is your textbook no reason to short, despite we should trade back in, we should trade back in, we should trade back in, we should trade back. No. And I think Tom mentioned something really smart this morning, just to echo kind of what we were talking about. Trade with the trend until you're given a strong reason not to, because when the higher time frame is ready to move down, She doesn't need an introduction. Like, you'll know. Usually that's on your second distribution. Bang. Anything other than death, we're bullish. Anything other than death, right? And I mean, if you look at it, really, by the way, you see how we retraced into this? Just to echo this point. You might not be in straight away, like in here, but you will get that retracement with your narrative. You may not be in here, but guess what you're going to have? You're going to have a retracement to fit your narrative. So chasing in here, hoping for 10 points? No. Allow the trade to come back to you. And if that doesn't occur, and this kind of does something like this, then that's not our day, right? But you'll find the majority of the time that it comes back, right? That it comes back. It comes back. No matter what area you're looking at in here. Whether you're looking at it from a structural perspective, right? You got protected lows in here, and you're just following it up. You've got a low here. Our objective's this, okay? There's your low, there's your low, there's your low. Like, even, these aren't even protected. We're just looking at order flow lows right now. You got a low, you got a low, you got a low, you got a low, you got a low. Like, follow it up. Follow it up. Right? We are brilliant, but we're dumb and follow price when we need to. And that keeps us on the right side of the trend. Who's excited for the Wombo video coming out? We keep talking about it. I'm hyping it up. Hyping it up. Yeah, no kidding, eh? Are we still friends? Are we gonna make it even though yeah, it's pretty cool. It's pretty cool. It's pretty cool. Yeah. Any questions over today? Not a lot to go over, honestly. Like, pretty much just like an endless grind up. Structure was bullish since yesterday. No real surprises in the chart or anything to really be concerned about. The only thing really that might have been hairy was this higher time frame drive down. But once we got held up here and we got our push away, it was longs pretty much all day until you know, we had this SNDR that broke. Well, where else are we trading back into? Trading back into the origin of the move. You could argue this area here, or you can argue that area there, whichever one you're looking at. We got our trade back into it. Right? And actually, almost as if he's a Jedi master or something. Bailey asked a really interesting question yesterday. I don't know if you guys were on the post market, but he said how to kind of look at your days for an infinite bid versus otherwise, and you're looking at structure. Right? Create a zone, cool. Lethargic movement down. This isn't higher time frame at all, is it? Higher time frame would be like, okay, we're finished here. Let's go. Let's go, right? Instead, we got this garbage leading to rejection, leading to trading back in, leading to yet another higher time frame shove. And then no structural anything broken for the remainder of the day. Right? Follow your structure. Trading with trend, I mean, God, you could have pretty much gone long anywhere and not, unless you had like a 2-point stop. You know, buying on any sort of retracement for the majority of the day, you would have been fine. I think that understanding that what sort of structure we're looking at here is important, because that would have kept you on the correct side of this lower time frame objective, putting us down into our area of interest. And a lot of that has to do with sort of our short-term narrative that the Wombo video is going to help with. But this SNDR, like let's even call it from here, that breaks. Yeah, well, guess what? We traded back into it. We mitigated the volume on the other side, right? We're in a downtrend here. And now you're speculating, well, where are we in a downtrend to? And that's where you start to look out. Even if you had this area here, right? Structurally, until we break this, this is your conservative account growing trade. And over time, you will learn when to really get involved here, or better yet, in here. Right? I got to look into hiring a driver or something in the morning. It happens at 8 a.m. every day, 8 to 8:30. Right? We're talking $4,000 per day that I'm missing out on. Plus. Jesus. What's going to be very interesting is seeing everybody on Twitter right now that's just like, see my model? It works all the time. All you do is just go long here, and then you make your money. Follow me for more trading advice. And then they're going to get wrecked in a week when that stops working. But everybody's coming out of the woodwork right now. Oh, God. Literally go long anywhere. You see my day? I made $1,000 today. They're literally going long here. Just buy the breakout, bro. like, Jesus. You guys have been around the block long enough to know it's not one day. And this works in reverse as well for red days. One day or 1 week is not enough to really consider yourself consistent. Or at least to silence that voice that's like, you know what? Maybe I'm not actually. Maybe I'm just lucky. Maybe I'm not really good enough. You know? Yeah, I've been trading well the last week or so, but I'm not really there yet. It's your ability to weather the storm. Whiskey helps. Yes, it does. Yes, it does. Whiskey and clarity. I want to see X, and if I miss it by a tick, then I'm not involved. If I miss it by a tick, I am not involved. Right? And in reality, I wanted to scalp this trade here inside of our pocket, but I wanted this low taken at 18. This candle did not take it. So in reality, I had no real business looking for a scalp in here. 40 Creek, love it. Empty. Where's ours, man? Right? So in reality, even this initial trade, waiting for this low and then getting involved somewhere in here, right? And then if this ends up looking like this, I probably should have just taken it off rather than allow it to come back. then allow it to come back. But excuses are for, yeah, they're not our mentality. Today wasn't a day I should have been trading regardless, but that is what it is. You know, I'm old apparently, and I can't stay up past 11 o'clock. But yeah, excuses are what they are, right? You never get ahead with anything if you're not massive accountability, right? Green Day regardless. So, look at that, Jose. Love it, man. Yeah, me too, man. Me too. I'm exhausted. I got a meeting in 20 minutes for the business. Questions. Everybody understand what we're looking for? I'm kind of spinning my wheels a little bit. Any questions on executions this morning? What we're looking for in terms of inducement? There's actually a really good video that I implore all you guys to watch. I'll post it in here again. I haven't watched it for a little while. It's probably a good one.
If you trade supply,
Post it in here for you guys. He's actually a phenomenal trader, or educator, I should say. But that's your guys' homework. That's your guys' homework. And then what we'll do, I'll post something probably tonight in the markups channel, and we can have a look at this, and that markup will be in preparation for the Wombo video, right? So we're gonna do something similar to whereabouts you expected to tap into, and what you're looking at, and then go from there. Did everybody have a Green Day? Did we sit on our hands and at least follow price well? Did we? How are we doing? Okay. Cool. No trades. Love it. Didn't follow my rules, a bit red. Okay. Whereabouts did we have losses? Was it in this? And then we kind of missed this. Did we chase or expect something happening out of here or in here? Did we go long in here and then get dumped on? Whereabouts did our losses come from? All right. I mean, pretty much anything after here, if you're shorting, then you're going to have a hard time. Right. And I did mention don't short. Even in this, any pullback going along was fine. Entered but didn't hold, and then chased. Yep. Okay. That's a lot of sort of back testing with exactly what you're looking for. Early in the first, missed the real move, and then entered on the reverse. Okay. Trigger sweep at the top of the OTE. Are we talking this one or this one? $11 a.m. Okay. So here or here? This is 2, this is 1. Or are we talking about this one? So this one will be like 3. First loss was 2, okay. Second loss was after price came back into 1, okay. 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 So in terms of execution, we're looking at this, right, as possibly dropping down into our zone and then violent reaction. We kind of got that in here, right? So okay, fair enough. Like, say we're involved on this long here, right? Let's say it's like here, it's 26, and this is our stop at the low. Right. Initially, it's 10 points. We get our movement up. Right. This closes here. Like, sure, we're up, say 10 points. To call, but even say that we're up like here. Now our stop's 8 points. Fine. Right. It was not that aggressive. If I was, I wouldn't. Okay. So like somewhere like up in here, like the low 30s is where the entry was, basically. Okay. So there's 2 ways of looking at this, right? If the entry is an aggressive entry, you don't get in conservatively in the same aggression. Right? Now you're trying to mix the two. And what I mean by that is that if you're trading aggressively, you're in on the sweep or you're not in at all, period. Right? So this low is 24. You're looking for that sweeping and then coming back in. And that's your aggressive trade. Not up in here or in here or anything else like that. If you're getting up that high, you're then waiting for confirmation. You're then waiting for confirmation. And your confirmation ideally would be like something like trading above this high and then coming back into the zone to then get long, right? Otherwise, we're looking at just getting involved on this. So we can't mix the two for this exact reason. If we're in aggressively and we have to be in at a good spot, and if we're in a good spot, now when it comes out, we either have a small loss or break even or whatever. Right. So we would have to trade above here for confirmation, wouldn't we? Right. So this is either going to be an aggressive trade that goes flying, and we're right, or at minimum, right? Because I was looking for this low, but that's kind of a nuanced thing, that this should trade up to here, and if we see failure, then we're coming back down for a better move. Cool. That was one of my thoughts. So the fact that we traded here, we couldn't even trade above this high here was telling, and mixing the two is an issue there. Now, this trade, again, you have 2 different ideas, right? And let's assume for right now, and I'll take the drawings off, that this area is our pocket. We're looking for something in here. So let's get rid of all of it. And now we're reading bar by bar. We've got our SMDR here, lower time frame. So now we have 2 entries in here. We've got our aggressive sweep trading through. This is our long for aggressive here. And we're looking at boom. Or our trade is we have to wait for this to give us confirmation, ideally above this high. Right? And then we're looking for this to trade back into our zone. We barely got that here. And then it left. And we're seeing kind of this lethargic price movement. Right? You could argue that this traded above here and this is our tap back in, which did generate a little bit of more buying. volume, and then we had this. Right? So either way, we're not getting involved anywhere up here unless we have major confirmation. And by major confirmation, I mean we've now traded back in and we're violently out, and now you're looking at some sort of lethargic movement inside of here that's going to yield on higher prices still. Right? So we're not involved on the aggressive trade here on this candle, because we still could be wrong. If we're trading aggressively, we have to be in on the sweep. And I would recommend that we kind of wait for something similar to this in order to get involved that way. Right? Like this didn't trade. That really doesn't look that different. So look at this candle's response and this candle's response compared to what's going on in here. Right? This one actually failed above your structural bear candle here. This one actually closed inside it. We then took liquidity, and what could we do? We couldn't close above these. Both of these failed to do so. Right? Whereas structurally, if you're looking at the bullish candles here, okay, we've got this one, it failed above, cool. And then we're kind of going, okay, you know, this is bullish, but not really seeing anything great. And then we have a major candle closing well above the prior ones here. Right? We sweep that, we come down to the open, and we fail to put in a valid high. This one, right, actually failed to put in a valid high here with the tap back in, and then the response was this. It wasn't really until this. We weren't wild about that at all because we're not seeing any major bullish price action. But this candle certainly, after this happens, we knew we were taking this low. Right? But in terms of entry, you've got two different ways of looking at it. You've got your aggressive trade down here, and now you're looking at body closures above this and ideally some follow through or the defense of which, right? So as soon as you get this candle going here and closing above, you're now expecting this to be manipulation. You got your trade back in, it now leaves, right? And now your break even wherever your tap back in is. Right? You're looking for your tap back in, so if you're measuring it, you've got your pocket here at 1750, and this is your stop. And then it leaves, okay, and then it comes back down, and you're either out flat or you have a small loss, whatever it is. Right? Or, but you need, if you're going to get involved on the tap back in, it's not ideally going to be like even this is a little tricky, right? You're looking for a genuine attempt for the market to trade away and then trade back in to mitigate the zone, and then that should be gone, right? Rather than like entry patterns, we're looking a little bit more in depth of what's price actually trying to do and what's it succeeding at doing. That's the best way of kind of learning and studying how to stay out of trouble. For example, in here, price is failing to sell off. She's trying quite heavily, and then we get trade above here. That's leading to higher prices to somewhere, right? We had a major attempt to rally here that failed, and then nuked, right? That's telling us that we're not ready to go up just yet. Hold on one second, guys, sorry. Sorry. So our two ideas, just to reiterate this, we need a change in order flow, and we're expecting this mitigation to be gone, right? Or we're looking for that inducement, and then we're taking the sweep, and then this is your second entry that you're now expecting mitigation, and that's when we can go break even, right? So it's either the aggressive entry when you're confident in your narrative, or the conservative entry afterwards, right? Last structural bear bar, cool, right? Body closure above it, pretty much here, right? Little tricky because this is closing inside. We don't typically like that, right? But again, this might be unclear to you, right? And I stress this, I cannot stress this enough. Chasing is definitely not where we want to be. We want to allow the trades to come to us and speak to us. And what you'll find is that when we leave these areas, there will be a second trade that comes back in. And that might be your jam. You're waiting for price to tell you that we're ready to go up now. We've broken a protected high. Now you're looking for what? You're looking for either a market structure trade back into the zone. This didn't hit the midpoint, in fairness, right? It did trade into the SNDR, right? But you've also got your pocket, right? So what you can do is, like, even if you trade one micro, take the trade to the pocket. Backtest this. Backtest the re-entry. The area where I'm looking to really add heavily into my positions. Right? This was a downtrend. What snapped that downtrend? What area? Now we're expecting price to retest down. This was the area here. Do we have confluence? We've got a pocket inside of that area of interest. Not this here. This was the area where we expected this to do this. And we made a decision here to fail to do so. Right? Hopefully that helps. Any other questions, lads? That low at 1106. Yes. I think that's fine. The reason for that one, yeah, I think anything in here is fine, right? This, you're expecting this movement here to be the retest of this area. Why? Where's our SNDR in here? It's this here. Have we violated it? Yes, we did. So now we're looking at, like, we're now looking at trading back in as mitigation. Now we've broken our lower time frame SNDR. You want to see my fib settings? Sure, man. If you're trading the confirmation trade, you're essentially looking at putting it below the low itself, right? Or if you're talking about this one, then I would have it underneath this low, right? The low of the area that generated the movement up, or whatever you're using for confluence. Right? But what you'll find through your study of these re-entry trades, or these ones, like if you're getting involved here, your stop's going underneath this. And then if you're in a range, sometimes that will take it out. But body closures above an SNDR are sort of an advanced nuance where you're basically looking at wherever I get involved, like I have a 10-point stop, and then like you're almost immediately going break even when you get movement in your favor, right? So for example here, what I'm back testing and learning is that I have a lot more success than how I would currently trade it, having a 10-point stop from the middle of the pocket on the re-entry and then allowing it to run. And you got your 23.6, that might be your first area of interest. But given the narrative, like this is literally, where's my high? Right? Where's my high? And if this could happen at a different time every morning, I would be absolutely delighted with that. Yes, I agree with all of that, NQ. I agree with all of that. Beautiful. Bang. On the re-entry after structure is shifted, you can be more aggressive than in here. Yes. After you've broken structure, you can look at that. Right, as long as it has confluence with it. We'll go all through all of this on the video that we make this weekend. Right, I think Mikey and I have a bit of a different way of entering. I don't think he enters at the midpoint like that. I think he's a lot more reactionary, and he's done actually more forward testing on this than even I have. So we'll definitely put our heads together with what works best for you guys to follow. Okay. Yes. Yeah. I mean, again, as long as you're on the right side and you've got confirmation. We've broken structure now. This is a body closure above. We've now put in a valid low after breaking structure in higher time frame bullish, intermediate time frame bullish, now our lower time frames bullish. People bought here, people bought here, people bought here, people added all the way up. People bought the close of this, that it was weakness from tapping back into this area. Pretty much anywhere after this candle that you bought, you made money. That narrative and structure and location is far more important than some sort of 5-second entry model or something in here. Right? All right. I got to go for a meeting, guys. I'm going to post this video and the lives from this week. I think I owe you guys a couple of them, actually. Been working on the course, as you guys know, so apologies for the delay. And yeah, we'll hit you guys up very, very soon. $100 is good, 50 longs, 50 shorts, and you're probably good with that, thank you. We'll see you guys tomorrow morning. Cheers.